afternoon. You're watching Market Fatafat on ET Now. I am Snehisha. Along with me is Ankita Saxena. This is a show where we'll be taking you through all the stocks that are in the spotlight today. And well, Ankita, the entire market is in the spotlight today. Given that even stocks with slightly positive news flows, be it quarter four updates or order wins or any positive news flow, even all of those stocks have given into the market pressure today. And largely red is the shade of the day.
Absolutely, Snehi. It's the shade that you're wearing today. It's that's the color of the market today. Absolutely bloodbath across D Street. In fact, it is a handover coming in from the global markets, the global mayhem, and India has not been spared either. So Nifty is sitting at 21,885 right now, trading with cuts of almost 4.5% in trade. A one-way decline coming in. There is no recovery in sight as of now for Nifty. Even for Nifty Bank, there is no recovery. In fact, Nifty Bank has been a consistent outperformer that was really aiding the markets for the last few sessions. But today Nifty Bank has also caved into the selling pressure. That is also trading with cuts of 4%. A special mention for India Wix. That has seen a sharp spike up of almost 64% in single session today. So India Wix is up in a way 64%, which shows the kind of volatility that we are facing in the market today. Also, the advanced decline ratio, needless to say, is tilted in the favor of declines. In fact, there is no Nifty constituent that is trading in the green, all of them in the red. As far as sectoral indices are also concerned, all the sectoral indices are in the red. In fact, Nifty Metal is seeing a sharp knock of almost 8% in trade today on the back of the demand threat and, of course, the reciprocal tariff, that the downturn that the global market is seeing on the back of demand and the growth slowdown. Nifty Metal is really taking it on the chin with cuts of 7%. Nifty Realty, Media and IT continues its decline in trade. So all the sectors are in the red. So basically, it's a one-way market. It is red, a sea of red across market there, Snehi.
That's what the market is looking like right now. No surprises that everything is tanking and nosediving in today's trading session. On that note, let's welcome on board Sameet Chavan, Head Research Technical and Derivative Angel One. And from our in-house research team, today we have Gaurav who's joining us. Sameet, before we get kick-started with the show and talk about what individual stocks are doing, Sameet, give us your view on where you think the markets are headed from now. Do you believe that this big knee-jerk reaction that we've seen today is the worst, or we can expect some more volatility as and when we have more clarity on when pharma tariffs are announced, and Trump has said that more can be expected in the future. Amid this entire trade war between China and US, India is stuck in the crosswinds. What are you making of the market? What are some key levels that you are spotting?
Good afternoon. In such kind of global chaos, it would be very difficult to comment whether this is likely to cool down or not, because you never know. This is all news driven, and the kind of developments that have been happening since last week or so. Market is clearly reacting to that, and if you see a massive sell-off in US markets on Friday also, and since morning, the Dow futures are trading deeply in red. So we are clearly mirroring that development. So levels wise, in such kind of market, you never know what sort of levels would be respected. But technically speaking, there's important cluster around 21,700, 21,400. In general scenario, 400, 500 points is a slightly bigger range, but the kind of volatility that we are seeing, and you also highlighted that VIX has spiked up more than 60% in a day itself. So we are, as far as India VIX is concerned, we are back to election day volatility, and 21,700, 21,400, if these levels get held, then probably we see some consolidation or a relief move. But if things get worsen globally, we might see Nifty sliding below 21,000 as well.
Right, Sameet. Also, let me get in your view on the sectors. Now, look at the sectors. It is a sea of red, but particularly Nifty Metals, Pharma and IT are the sectors that are in focus today. And in fact, IT has been declining away in trade. And in fact, Nifty Bank, that has been lending support to the markets of late, even that has caved in today. But going ahead, what do you see? I want to particularly talk about Nifty Bank here, because Nifty Bank was a beacon of hope, really, if you will, in this market. How do you see Nifty Bank panning out in the future also once the dust settles? Do you see Nifty Bank to be leading from the front, and what are the levels to watch out for?
The Bank Nifty has been the strongest of the lot in last 1.5 months. It has already given decent rally in last 3 odd weeks. But today it seems that it has surrendered to this global chaos. As far as Bank Nifty is concerned, we were seeing important support around 50,000, 50,500, and this important support has been reached at least on an intraday basis. So till the time we do not see any recovery beyond 50,200 on a closing basis, Bank Nifty also may extend its losses. 49,000 is the next important level to watch out for. Once Bank Nifty slides below 49,000, then 48,200 to 47,800. This is the important support cluster to watch out for.
Before we let you go, just a quick view. Any view on metals and IT? These two sectors have really been taking it on the chin ever since the get-go. Any levels that you are spotting? Anything that you would, wish to add when it comes to Nifty Metal and Nifty IT?
Yeah, as far as Nifty IT is concerned, this has been one of the weakest links, over the past couple of months, and it has corrected sharply. For traders, for momentum traders, it is clearly a falling knife. But for investors, Nifty IT is trading around 31,800, 31,900 now. In case the important levels of 28,500, 28,000 comes, then it's a good buy. One can start accumulating quality propositions like TCS, Infosys, HCL Tech. Once Nifty IT reaches this important support zone. And as far as Nifty Metal is concerned, today we are seeing a fresh breakdown in Nifty Metal. There's a strong support around 79.20. This important support has been breached with a downside gap. So now the next important support for Nifty Metal lies around 7,300 to 7,000.
So those are the levels to watch out for on IT and metal. Sameet, thanks so much for joining us. Appreciate you joining us on the show and helping us with some targets and levels to watch out for across indices as well as the market. But thanks once again for joining us. On that note, let's kickstart this edition of Market Fatafat and talk about all the stocks that are in focus today. First up, we have to talk about a big stock, a free faller in today's trading session, if we can call that, and that's Trent, because the biggest fall in the last 4 years is what Trent has logged in today. That stock is in downfall on the back of its Q4 update, and almost 15% lower is where the stock is. Slight recovery coming in from the day's lowest point, because that stock at one point was lower by almost 17-18%. Right now also tanking by about 15%. It's on the back of a weak Q4 update coming in. Growth is moderated sharply in Q4. Revenue has come in at 4,334 crores, which is an uptick of 28% on a year-on-year basis. Now, brokerages, the likes of Motilal Oswal, they were estimating this number to be 36%. And remember, last quarter also revenue growth was 36%. So there's been quite the mismatch between expectation and reality. And also on the sequential basis, it's dropped from 36% to 28%. That's the revenue growth we're talking about. Annualized revenue per store has also come in flat, wherein it was a growth of 8% last year. The store additions that have been done largely have all been back-ended, even though they have opened stores across Zudio and Westside. On the back of this, Motilal Oswal maintains a buy rating, target price 6,800. Antique maintains their buy but has cut the target price to 6,801 from 7,363. They've also cut EPS forecast by 2 to 10% for FY25 to 27, and they also say that the Q4 revenue growth was slightly below their estimates. So that's a lowdown on Trent. That's the reason the stock was falling. Weak Q4 update coming in for Trent.
Alright, a weak Q4 is weighing down Trent, but there's another candidate from the banking pack, IndusInd Bank, that's come out with its quarterly updates. Gaurav, take us through what the updates have to say. As of now, the stock is down 1.5%, but tell us, what do the quarterly updates look like?
When we talk about IndusInd Bank, yet another quarter of weak updates is what we can say for IndusInd Bank, because when we look at loan book growth, that has gone down almost by 5%. So we have seen a decline in loan books at around 5% on a sequential basis. When we talk about deposits, there also we saw a kind of flat trend on a sequential basis, although the deposits have gone up almost by 7%. But when we talk about CASA ratio, there also we have seen a fall. So sequentially, if we compare CASA ratio, that has gone down almost by 200 basis points, while on a YY basis, it has gone down almost by 500 basis points. Let's not forget that now brokerages are also being a little pessimistic on the stock, because now they are expecting sharp decline of around 20 basis points in terms of net interest margins in Q4 Q4, and at the same time they are also expecting bank to report net losses for the quarter. Let's also not forget that recently we saw that the bank has actually corrected from its high point because of the 1500 crores worth of the impact that we are expected to come, and the external report is yet to come on that. So definitely there is another news flow which we are waiting for, but at this moment it seems that very weak set of numbers for Q4, and on back of this we are seeing weakness in the stock price as well.
All right, weakness seen in IndusInd Bank on the back of that, a bearish call coming in from the brokerage notes and the quarterly update. But moving on to a stock which is actually bucking the trend in today's trading session, perhaps the only stock that I have seen doing well right now. In fact, it was up almost more than 1% in morning trade. Right now, I think it's up. It's up 2.3% in trade. One of the few stocks that are doing well amid this market downturn, and that's Delivery. It is on the back of the fact that the company has announced it has signed a definitive agreement to acquire a controlling stake in e-commerce Express for a cash consideration of about 1,400 crore rupees from its shareholders. Now the acquisition is being made at a trailing enterprise value EV to sales ratio of 0.7x, which appears attractive in comparison to Delivery's current 1.7x ratio. That is according to HSBC. Now the acquisition price of 1,400 crore rupees is notably lower than the implied valuation of 4,900 crore rupees based on the ownership of the largest shareholder partner holding a 50% stake and its acquisition price. However, the analyst also highlighted that e-commerce Express lags behind Delivery in terms of growth, profitability and customer concentration, and the objective of this is to increase the scale resulting from the acquisition of the expected Delivery to invest in more effectively in improving the quality of services for Delivery. So on the back of this acquisition, Delivery is up in a way 2% in trade today.
Why Delivery is in focus. Let's talk about another sector that's entirely in focus today, and stocks from this sector, a couple of them are not doing very well today, and that's the oil and gas space, on the back of a JP Morgan note coming in this morning, wherein they believe that the trade war is all set to hurt global growth as well as oil demand could also be hampered. Oil prices should trend down and continue to remain lower from here is what they believe, and on the back of that, JP Morgan's forecast for oil for 2026 is below the $60 per barrel mark. They say that lower oil prices will evidently be bad for companies like ONGC and GAIL. Let's pull up the charts of ONGC and GAIL. GAIL is lower by almost 5.5% in today's trading session. They say that lower crude prices will hurt Reliance's gas margins as well. And OMCs on the flip side will enjoy expanded margins on the back of the reduction in their raw material, which is crude. And on the back of this, they prefer IOC and BPCL. So IOC and BPCL, they are seeing cuts, of course, but IOC is not falling to the extent of the entire sector, the entire oil and gas space that's falling. HPCL, in fact, on the flip side, is up 1.6% as we speak. And IOC and BPCL, are very nominally lower in today's trading session. They also say that OMCs are likely to report strong quarter four earnings at their current rate, and margins of retail parts of CGDs could expand. And out of the entire pack from CGDs, they prefer Mahanagar Gas as well. So that's the JP Morgan's take on the entire oil and gas space. Mixed note coming in. Some stocks from this basket are doing pretty okay for themselves in today's trading session.
All right, so that's the oil and gas basket in trading session today on the back of that note. But moving on, Tata Motors is another stock that's taking a sharp knock. In fact, after that announcement of JLR's supply to US being shut down, Tata Motors is tanking 6.4%. Tell us, Gaurav, the details of the news flow and why have you picked Tata Motors for us?
He has said they will be pausing the vehicle shipment to USA, and this is on the back of the Trump trade. Let's not forget that he has imposed around 25% tariff on all the vehicle imports, and on back of this now Tata Motors has decided to pause the trades. Let's also not forget that around 16 to 17% of the total revenue of Tata Motors comes from US market, and on back of this, when we look at the impact also, now the stock is down almost by 6.2%, and the reason because the 17% impact that we had seen earlier in the revenue can be seen because of this pause. Let's also not forget that brokerages are being a little stable on the stock because Morgan Stanley has actually maintained their equal weight stance and a target price of 853 rupees. What they're saying is that the tariff could go actually negative in terms of when we talk about free cash flow for the company, and slowdown can actually make a bear case of around 416 rupees for the stock. So here also they are seeing some kind of downside risk. Fourth quarter of FY25 should be strong for JLR, but from here on it will be really a key thing to watch out as how the export market depends and evolves for JLR. So definitely a pessimistic note from brokerages as well, and on the back of this we are seeing a negative impact on the stock price as well.
All right, moving on then from that news flow on Tata Motors and the selling pressure that Tata stocks are reeling under to another counter which has come out with its operational updates, and a note from JP Morgan, and that's Jubilant FoodWorks. Now, if you look at the operational updates, the consolidated revenue from operations was up 33% on a year-on-year basis. The standalone revenue from operations was up 19% on a year-on-year basis. Domino India's LFL growth came in at 12%, and Domino Turkey's LFL came in at 0.9%. Now, the JFL group network has reached 3,316 stores with a net addition of 56 stores during the quarter. So that's the operational update. But now let's look at what JP Morgan's note has to say about Jubilant FoodWorks. It's maintaining a neutral rating with a target price of 700 rupees per share. And they feel that Jubilant has maintained a healthy revenue growth trajectory for Domino's India, wherein it has come in line with what they were expecting. Also, they expect the standalone margins to moderate in quarter four on a year-on-year basis, and they find the valuations capping an absolute upside now, but the stock may hold up well in short term, amid the healthy revenue growth that the counter is seeing. Also, they expect a more balanced revenue and margin trajectory in FY26. And on the back of the bullish brokerage note, the Jubilant FoodWorks was doing well in morning trade. That has also caved in. Right now, it is trading under selling pressure of almost 2%.
Okay, so that's the take coming in on Jubilant FoodWorks. But let's also go across and listen to some industry reactions. And India's Meaty Secretary has commented on the ongoing tariff turmoil. He says the Commerce Ministry is taking uniform stance and India is better positioned in terms of electronics as compared to other nations when it comes to tariffs. Let's go across and listen in.
Tariffs are not something which relate to one sector. This is an issue on which the Commerce Ministry is taking a uniform stance across various ministries. For us, electronics related tariffs are of course important, and what happens in that sector is important. Right now, we are at a position which is relatively advantageous in the electronic sector compared to other competitor nations on whom tariffs have been imposed. There's of course another detailed agreement which has to be negotiated and worked out with the United States. We will provide our inputs to the Commerce Ministry, which will be the lead there.
All right, moving on then, coming to you, Gaurav, you picked out Utkarsh Small Finance Bank for us. Another operational updates candidate. Tell us, what does the update look like?
Well, yes, yet another candidate, and again we saw some kind of weakness in this bank as well. Because when we talk about loan book portfolio, that has increased only by 7.5% on a year-on-year basis. Now the loan book portfolio stands around 19,600 crore rupees. And when we talk about total deposit, there we saw a good number of around 23.4%. But once again, when we talk about CASA ratio, it now stands at around 21.8%, which is actually a good sign, because a quarter ago the CASA ratio was at 19.7%. When we talk about the guidance, now let's not forget that the bank has actually missed their own guidance. Last quarter itself, the bank had cut their loan book growth guidance to around 18 to 20% versus what it was at 30%, and the actual number has come to around 7.5%. So definitely again a negative update from the bank. Also, let's not forget that during the result season we are keen to see how the asset quality is going to be for the bank. But for now, on the back of these numbers as well as the weakness that we are seeing in the market, we are seeing some kind of pressure in the stock price of Utkarsh Small Finance Bank.
Okay, so that's the update coming in on Utkarsh SFB, but let's move on and talk about Nykaa, because quarter four updates keep the market momentum going. But nonetheless, despite a rather good set of quarter four updates coming in, Nykaa has given to the market pressure, and 2.5% cut is what the stock is trading at right now. Nykaa witnessed a continued growth momentum in quarter four, and the firm's consolidated net revenue is expected to grow in low to mid-20s. Even for overall FY25, revenue growth is estimated to be at similar levels in the mid-20s category, indicating consistent growth across all quarters of FY25. The company's beauty vertical continued to outperform the broader industry, with the gross merchandise value, with the GMV growth projected in the low 30s. Nykaa attributed this to sustained investments in customer acquisition, strong volume growth, and robust retail performance. Net revenue growth for the beauty business also remained steady in the mid-20s, in line with recent quarters. Nykaa's fashion vertical, meanwhile, saw GMV growth in the high teens, reflecting a sequential improvement in the core platform business. However, net revenue growth lagged due to a subdued performance from its own brands and a dip in content-driven activity in quarter 4, which typically sees higher engagement in the festive-heavy third quarter. Nomura has reiterated its neutral call on the company with a target price of 190 rupees per share, and they're saying that the beauty and personal care GMV growth was along expected lines. However, while it had predicted 11.1% growth for the fashion segment's GMV as against high teens growth reported, so exceeding the expectations. Overall, good set of quarter 4 updates coming in from Nykaa, with stock giving into the market pressure today.
Absolutely, stock giving into the market pressure. Moving on to another count, Godrej Consumers, that's come out with its quarterly updates. Let's look at what it looks like. Well, as far as the standalone huge VG is concerned, it is expected to be in the mid-single digits, and the revenue growth is likely to be in the single digits. The mid-teens UVG in home care and mid-single digit decline in personal care. Now, the personal care continues to go through a price-volume rebalancing on account of the rising input costs, and at a consolidated organic level, they expect a high single-digit INR sales growth with mid-single-digit UVG. Also, the EBITDA margins are likely to be in the similar range as in quarter 3 FY25, despite the high inflation in palm and the relative derivatives. Also, the international business continue to do well in the relevant strategic objectives, but Indonesia business is expected to deliver mid-single-digit UVG and single-digit revenue growth over a period of time. And also, Godrej Africa, USA, and the Middle Eastern business is likely to deliver strong double-digit growth, UVG and revenue growth. So overall, it looks like a positive update coming in. On the back of that, we can see a Godrej Consumer also as one of the stocks that's bucking the trend, and it's trading up 0.5% in trade right now.
Update coming in on Godrej Consumers. Very good set of numbers if you compare it with quarter 3, and that's the reason why the stock is among the handful of stocks that's in the green today. But let's move on and talk about Macrotech Developers, or Lodha as we know it, and a good set of quarter 4 updates coming in for Macrotech as well, and they have also surpassed their their FY25 pre-sales guidance, so that's also looking good for Macrotech. But nonetheless, because of the market and how the way things are faring today, Macrotech has also given into the company to the market stress. For the fourth quarter business update, they said that they've witnessed a 14% growth in pre-sales compared to the previous year. They also said that they've achieved the best ever quarterly pre-sales of 4,810 crores in the quarter 4. The company also posted a 7% growth in pre-sales compared to the previous quarter, and this contributed to the company's total pre-sales for financial year 25 reaching 17,630 crore, surpassing their full year guidance with a 21% growth compared to the previous year. If you talk about collections, they also gained 26% to 4,440 crores in the fourth quarter compared to the previous year, and 3% increase from the previous quarter as well. For the entire fiscal year, collections total 14,490 crores, which is an uptick of 29% from FY24. Healthy set of numbers coming in. Full FY25 guidance has also been achieved and surpassed nicely, but the stock is giving it into the market pressure, and the stock is trading lower as we speak.
All right, with that, we're completely timed out in this edition of Market Fatafat. Gaurav, thank you so much for joining us today. But with that, it's a wrap on this edition of Fatafat. Snehi and I will take care. Thank you so much for tuning in. Don't go anywhere. Market action continues on ET Now.
If you like this video, then like, share and subscribe to ET Now.